Right, welcome guys once again. Everyone who is in this meeting and everyone who is not in the meeting and just watching the recording. Now what I told you is that we are separating this live meeting into two parts. First, I will host an educational part where I will break down the trading ranges, and this will be one more confluence that we will be able to add to the trading plan on the 50-minute time frame. And basically, with the help of this confluence, we will be able to add more trades and we will be able to execute more trades in general. Second part is the watches breakdown, and the third part will be a question and answer. So let's just get started with trading ranges. This will be a really short educational part, but it's a really important thing to have and to mark out on the screens. So basically, with the help of these trading ranges on the 4 hour time frame, uh, you will just simply be able to execute more trades and quality trades, I mean. Not just simply executing random trades everywhere you see a breakout structure and a sweep and stuff like this. No, this will be quality trades. I mean, these will be quality trades where you actually follow the trading plan, you actually look for reversal key points, key areas, and yeah, let's just get started without further ado. So let's just assume that we have a bullish trend. I just drew a 4 hour bullish trend. Let's just say that this is the 4 hour time frame. What you see right here is obviously we have a bullish trend and price swept the previous structural low point here at this region and then broke the high point immediately. Meaning what you are doing here is that you're pulling a Fibonacci from the low to the high. After this, let's just say the price comes above the previous high, breaks the structure, and then after breaking the structure, what you do in normal cases, according to a strategy, according to the 4 hour outlook, you adjust the Fibonacci from that low up to this high, and you are waiting for confirmations on this 71 level now, right? Okay, let's just say the price once again comes above this high point. What you do, according to the original 4 hour outlook, you are adjusting the Fibonacci up to this high point, and that's where you are expecting 4 hour trades and 50-minute confirmations. Yeah, but now what we do with this addition is that we don't do this anymore. We do not simply do this anymore because we care about ranges. We care about 4 hour trading ranges. What means is that when we see a breakout structure happening in a clean flow, like in a bearish or a bullish flow, in this case scenario, we are experiencing a bullish flow. We have a clean bullish flow in this case, and price is seemingly clearly heading to a bullish direction and breaking a structure to the upside over and over and over and over again. What we do instead of simply just keeping the original Fibonacci from this low up to the modified high point is that we pull new and new trading ranges. So as soon as we saw that price broke above this high point right here, what we do is we pull the Fibonacci from this low up to this high point, and there you have a new 71 level. And when price breaks above this high point again, you just simply modify to this low point up to this high point, and you will have a new 4 hour trading range. And why it's important to do this is because there is a flow. There is a clean direction in the market. Price is clearly bullish, creating new structural highs, new structural lows, breakout structures stacked up on each other. And basically, what you're doing here is that you are not setting limit orders on these 71 levels. So the 4 hour strategy stays the same. So according to the 4 hour strategy, you still have this protected low point. You still have this high point where you pull the Fibonacci to and from, and this is still the 71 level. You trade on and you set limit orders on according to the 4 hour strategy. So you set limits here according to the 4 hour limits. Stop loss here, TP here. But what we do in addition, in terms of the 50-minute confirmations and continuation entries, is that we pull Fibonacci's new and new Fibonacci's once the breakout structure happens with clean structure breaking volume and order block. So the only criteria that can be left behind from this system is the sweep of liquidity. If this low sweeps no liquidity on earth, there is no sweep, no low gets swept out of this region, but price just simply continues to break the structure to the upside and breaks this high point, what you do is that you seek for a breakout structure. Obviously it's there. You seek for volume. I really prefer nice high volume movements here. I really prefer to see big arm long candles. So I really look for nice volume movements on the break. And obviously when there's volume, there will be order block as well. And once again, you pull the Fibonacci from below down from below up to the high point. You mark out the 71 level, and you do not enter there directly on the 4 hour time frame. No, you do not set limit orders here. You just simply wait for a confirmation there. So there is a higher chance that price will come back down to the 71 level and confirm it, then actually coming down to the original protected 71 level, because this one is protected. This is not a protected level. This is not a protected 71 level. But when it will be protected
when it's getting confirmed. Technically, not in the same meaning it will be protected, but it will be structurally, fractally structurally protected once the 50-minute realigns with the 4-hour time frame. So once price confirms the 71 level, you look for sweep, you look for break, you look for volume, you look for order back, you look for everything that I told you in the course. But once it's getting confirmed, you have a chance and you have the opportunity to take these longs. Because why? You have a clean flow on the 4-hour time frame. You are looking to trade in the 4-hour direction. When the 4-hour is clearly bullish, you see breaks, you see volume, you see nice bullish higher highs, higher lows. Why wouldn't you capitalize on this movement when there is a confirmation? If price aligns, realigns with the 4-hour time frame on the 50-minute time frame, meaning both of the time frames are heading in a bullish direction, the 4-hour 50-minute are heading in a bullish direction, and the realignment happens on the 71 key region of a 4-hour trading range like this, then you have a really, really nice and increased chance of actually hitting the TP on the 50-minute time frame. And in this case, you don't have to wait for this original 71 protected level to be mitigated and to be confirmed, because you are in a clean flow and price is showing clean bullish intentions by realigning the 50-minute time frame on key areas like the 71 Fibonacci level, and most likely the trend, the flow will be continued all the way up to break the new high point and create a new trading range. And once you call the trade like this, here, confirmation trade is getting called. Once you catch a trade like this, actually, you can pull a new Fibonacci from this low up to this high point. Obviously, there needs to be volume, there needs to be a break, there needs to be everything, but there will be a new trading range on the 4-hour where you can pull the Fibonacci from, right? So this is what you do. And now this is not the only part you do, because you actually might ask that, hey, what happens when price breaks below the 71 level? What we do after that? We simply just wait for the 71 protected level to be mitigated? No, this is not the case. Because what the case is that, for example, when price comes down, breaks below the 71 level, the last recent 4-hour trading range is getting broken, no confirmation is given there, yeah, and breaks below. What you do is that you do not give up there, because there are still any other key areas below this below this 71 level that is not the protected key area, that is not the protected 71 level, that can hold and reverse price, which could be this one, is this bigger 4-hour trading range. Therefore, you pull the Fibonacci from this low that created the break of the structure with volume up to this high point, and there on the new freshly given 71 level, new confirmations can be given. So price can easily sweep this low point out, come down, confirm the 71, and then continue the original bullish movement. And let me just tell you that this one you see right here is even stronger than the less recent 4-hour structural range, right? This, because it also swept 4-hour liquidity. Most likely when price comes down to a second trading range, like this one right here, it sweeps out liquidity of the previous 4-hour trading range. So it takes the liquidity, grabs that liquidity, confirms the time frame, realigns the 50-minute with the 4-hour, and then continues up. And when the confirmation is not given there, obviously you wait for a confirmation on the original 71 level, which is protected. And let me just tell you that these protected levels that you see on this line, these protected original 71 levels, are always stronger than the 4-hour range, 4-hour what did I want to say? 4-hour range levels, right? So the trading range levels like this one are always weaker than the original protected level, and the original protected level has a higher chance to attract price than reversing on these trading range levels. But when there is a clean intention in price action that it wants to break the structure continuously, break, heading into a nice bullish direction, you want to try these trading ranges. You want to confirm these trading ranges. And once the confirmation is given, you want to enter in the trade because you want to maximize the profit gain from that bullish flow you're experiencing on the 4-hour time frame. So yeah, this was a simple educational part I wanted to make for you. I mean, yeah, this cannot be further explained. It's just really simple. I mean, this is the only thing I can tell you about it. This is the only thing I can show you about it. And now everything will be built in the live examples. When you are trading, you will get familiar with these trading ranges. You will actually try to test them out. You will actually see how these trading ranges work, how the 71 levels react, what you can do in each scenario. So yeah, please just try to backtest this. Please just try to get the flow of what we are doing with these trading ranges. Hop on some backtesting sessions, try to test it out for yourself, and you will see that No, not all of the cases, but some of the cases will print confirmations on these levels, which has a nice chance to work out and to hit the TP and to generate more profit for you because you don't have to wait for these 71 levels, protected 70 levels to be mitigated. And now quickly, let me just read the chat. So when can we say that the trend changed? Basically, yeah, this is a good question. Let me just... All right, so here was a good question. Because we are, you know, in the live call, and we had a good question that when can we say that the trend changed? So obviously the 4-hour, we are referring to the 4-hour trend, right? So when the trend changes is when the less recent trading range breaks. So when it breaks, you will have a new range right here, right? Because yeah, you can pull the Fibonacci from this low point up to this high point and expect reversals, and actually not reversals, but you can expect confirmations on this new 71 level given. But at the same time, this low point will be broken, which means that the overall 4-hour time frame changed the direction from bullish to bearish because the less recent low was broken. And here comes a little bit of twist because you know this is not new. This is nothing new. We still use the same stuff. I'm just reassuring you guys that yeah, obviously when this high point is swept out and then it breaks the low point, there is a 4-hour reversal where you pull the Fibonacci from the original high point down to the low point, and there will be a short Fibonacci level as well, which you can once again confirm. So this is basically just playing with possibilities on the 4-hour time frame because yeah, this is a new thing. We are adding ranges, trading ranges to the overall confluence list. And then we still use the overall learned stuff from the 4-hour and 15-minute strategy. So nothing changes in this case where price sweeps the high point and breaks the low point, then there will be a break in the structure and the market structure will shift from bullish to bearish on the 4-hour time frame, and there's nothing changes like adding the 71 level from this high down to this low and looking for confirmations there. It still stays there. The only addition we have is that we are looking for confirmations on the 71 levels of the trading ranges because this has chances. I mean, these levels have chance to actually reverse price back into breaking the high point. But then the 71 level has a chance to reverse price back down into the protected level. So what we are basically doing here is just playing ping pong with price action on the 50-minute time frame. Because once price action confirms the 4-hour region, even if it's a short region like this one, even if it's a trading range region, long trading range region like this one or the protected level, if the 15-minute lines up with the 4-hour flow, then it is takeable. So you are just ping-ponging in between the 4-hour ranges, in between the 4-hour levels. And trust me, in live trading, it's not that complicated. I mean, these sweeps, breaks, been already used. We have been using this for more than a year now. What we are adding is these new trading ranges and just simply adding 71 levels. And if the 71 level confirms itself, yeah, cool, you can go for a trade. But just be careful that obviously the original protected levels like this one has more chance to reverse price, and the confirmations given on these 71 levels of protected regions are always going to have, or yeah, actually always going to have a higher win rate than just the original trading ranges. So these trading range levels fail more frequently. The protected levels hold price more frequently. Obviously, once again, like every time, this is playing with probabilities. So yeah, that's what I can say about it. And now let's just start the watches breakdown because there you will see the live examples of what I mean under trading ranges. So yeah, this was the education part. Let me just stop this part.